Good evening and welcome to the big story on NDTV Profit. I'm Nupur Talwar Suri. Well, the Finance Minister Nirmala Sitharaman on Wednesday slammed leader of the opposition Rahul Gandhi for making baseless statements after he alleged misuse of public sector banks following a meeting with a bank union. Now, she said that the Congress leader's misrepresentation of facts is an insult to the hard-working PSP employees and to citizens of India who benefit from a cleaner, stronger banking system. Sitharaman alleged that bank employees were harassed and forced to give loans to cronies through phone banking by the then Congress-led UPA government functionaries. Now, didn't the people who met with the LOP tell him that high concentration of corporate credit and indiscriminate lending during the UPA's tenure had resulted in significant deterioration in the health of PSPs? This is what she said, and I'm quoting it. Under the Congress, PSPs were targeted as ATMs for their cronies and shady businessmen, unquote. She said in a lengthy post on social media platform X. She's also said that the Modi government initiated a cleanup of bad loans, reforms in the banking sector, and recapitalization of 3.26 lakh crores of PSPs. Now, Nirmala Sitharaman has also said that the public sector banks have recruited 3.94 lakh employees since 2014, and the government has cleared employee-friendly measures under the 12th bipartite settlement. The minister's retort comes after Rahul Gandhi met with a delegation from the All India Banking Officers Confederation. The Modi government must stop using PSPs as an unlimited source of funds for their fraudulent friends. There's also more to a public sector bank than dividend check to the government at the end of the year, he said in a post on X. Well, to break down all these charges that have been made and also the counters that have been offered by the Finance Minister, let's go across to Pallavi Nahata, who is now joining us. Hi, Pallavi. So, Pallavi, to begin with, give us a primer on India's banking crisis and the larger picture, at least from 2014 onwards.
Right, Nupur. So, the year 2014-15 marked a watershed for India's banking sector. Now, the RBI, acting in the belief that NPAs were being understated, introduced tougher norms for their recognition under an asset quality review. Now, NPAs or non-performing assets are loans or advances that are issued by banks or financial institutions that are no longer bringing in money to the lender since the borrower has failed to pay them back on the principal and interest for at least 90 days or over that. Now, after transparent recognition by banks and the withdrawal of special treatment of restructured loans, stressed accounts were reclassified as NPAs and expected losses on stressed loans which were not provided for previously were also taken into account, were provided for, and this eventually resulted in peaking of NPAs in 2018. Now, higher NPAs necessitated provisioning, deeply impacted the financial parameters of banks, financial institutions, and in turn India's economy. Now, in fact, according to a Credit Suisse report which was published way back in 2014, the top 200 companies with an interest coverage ratio of less than 1 at that time owed 8.6 lakh crore rupees to banks, and nearly 44% of those loans, or about 3.8 lakh crore rupees worth of loans, were still yet to be recognized as NPAs. So, that broadly sort of sums up what quite the extent of the issue of not recognizing these NPAs was. Now, gross NPAs of public sector banks did go on to peak in 2018 at 8,95,000, about 600 odd crores, primarily as a result of this AQR that we're talking about. Of the prominent defaulters, we've all of course heard names of Mehul Choksi. The government had shared details of the top 50 defaulters in 2022, and his name actually ranked first as the promoter of Geetanjali Gems with about 7,110 crore rupees of loans that were yet to be paid. Another name that we're all familiar with is, of course, his nephew Nirav Modi, who got his first fraudulent guarantee from the Punjab National Bank in 2011. and over time managed to get over 1,200 more such guarantees in the next 74 odd months or so. Vijay Mallya, of course, left the country in 2016. That was actually the day a clutch of public sector banks had moved the debt recovery tribunal against him. And in fact, in January 2019, that was when he was declared a fugitive economic offender under the Fugitive Economic Offenders Act. But that's a glimpse of what those times were like. What has really changed since then? Well, over the course of about the past decade, we've seen the implementation of the Insolvency and Bankruptcy Code. We've seen multiple measures by the RBI and the government to strengthen the balance sheets of the banking sector, the asset quality review, prompt corrective action framework, the merger, and of course the recapitalization of several of these public sector banks by the government, which eventually led to a decline in these GNPAs as a proportion of the gross advances. Let's have a very close look at some of the key figures and what they look like currently. So gross NPA ratio of public sector banks has declined to about 3.12%. That's according to data for September 2024, and that's a figure that was in fact put out by the Ministry of Finance today. The capital adequacy ratio of public sector banks has also improved by almost about 400 basis points to reach about 15.5%. That's again for September. That's compared to about 11.5% or so where we were at in March 2015. Now, during FY24, PSBs have also recorded the highest ever aggregate net profit of 1.41 lakh crore rupees. That's compared to 1.05 lakh crore rupees that we had seen in FY23. These are just some of the stats that the Finance Ministry had put out not a short while back that give us a glimpse of just how far these public sector banks have traveled over the course of the past decade.
Pallavi, thank you very much for that. And of course, Pallavi is also joining me in the studio. But first of all, let's go across to Mr. Gopal Krishna Agarwal. He's the spokesperson of the BJP joining on the broadcast right now. Mr. Agarwal, good evening. Thank you very much for being with us. Mr. Agarwal, Rahul Gandhi, of course, has accused the government of turning public sector banks into private financiers of the rich and the powerful. Now, to begin with, what do you make of this, especially given the kind of loans that were given under the UPA regime? You know, who can forget the loans that were given to people like Vijay Mallya, Mehul Choksi, Nirav Modi?
Yeah, it's very important that when we talk about banking sector strength, we should, and the strength of the loans that they have outstanding and the NPA, we should get into the history of what happened and when. That's very important. The first foremost thing is between 2006 to 2014-15, the outstanding loan amount almost tripled to 52 lakh crores. And there was no recognition of bad loans among them. There was evergreening it. Again and again, you go for loans, then again give loan to recover that earlier loan, and that is called a evergreening episode that was taking place under the UPA. In 2014, when we first came, there was a massive review, asset quality review of the bank, and it was found out that we have to recognize these NPAs which were hidden under the carpet under the UPA government. And the Economist and the Finance Ministry came out with a report about twin balance sheet problems. That was that the public sector banks' loans quality was extremely bad. Most of the outstanding loans were not recoverable, and even those not recoverable loans were not being identified, and there was no provisioning about their bad debts. So our government, the foremost step that we took is, out of that outstanding 52 lakh crore, which increased in a 10-year span in the UPA regime, almost 3 times, we recognized the NPAs. Then the second step we did was resolving those NPA. What is recoverable, how it is recoverable, legal issues, laws changes, whether it was IBC, Insolvency Bankruptcy Code, Fugitive Offenders Bill, then Benami Properties, all these important legislative changes was brought under Modi ji, so that the banks at one point of time become stronger legally to recover that loan, identified the bad debt, improved the process of recovery, and the third was strengthening the bank balance sheet, because as you already mentioned in your report that the NPA in 2018 was almost 14.58% of the outstanding loan, and that had to be reduced because the strength of the banks was completely bad. They were not able to give any new loans, and we all know that banking is an important sector for capital formation, industrial growth, etc. So the standstill in the state with banks were there was improved. We capitalized the bank. Almost more than 6 lakh crores of NPAs loans which were not recoverable under changes in the law have been recovered. Now NPAs and the capital adequacy ratio is very strong. Banking sector is booming, and our SBI, State Bank of India, which was in a dire state in before 2014, is one of the leading Fortune 500 companies across the globe. Its assets, its net worth, everything has now equal to global standard. All the banks have strengthened. They are giving new loans. Better asset quality review has taken place. Under IBC, Fugitive Offenders Bill and Benami Properties, money is being recovered and government is capitalizing. Therefore, you see, if you basically compare the rates of public sector bank in 2014 in the market and currently, you will see why there is a difference when they are getting good valuation, because their balance sheet are strengthened. The legal status of recovery has been strengthened. So, and the last point that I would like to mention is provisioning. What the Rahul Gandhi and opposition try to create a false narrative is provisioning doesn't mean that you have written off the bad debts. You are just providing them and strengthening the bank's balance sheet. That money is recoverable. It is never written off. The government is taking multiple measures to recover them. And one question we want to ask UPA, who has created this, the jargon of NPAs, the bad situations of NPA? It is because the loans given under the UPA regime, and which was identified as
Right.
the minister also said that phone banking, ministers, top officials of government used to call banking chairmen and board to give loan to X and Y, and particular those persons who were favoring the political party and ruling party of that time, and was
Absolutely.
not being pressed to recover that loan.
Now, also, I wanted your point of view on the allegation that has been made by Rahul Gandhi. He says that banks are being forced to prioritize profit over people. And, that seems to be quite an anomaly, given the fact that we do know that there have been large-scale recruitments at PSBs. The figures that the government has put out seems to suggest that 3.94 lakh employees have been added. And also, there has been a lot done in terms of helping employees. So give us a sense of that.
The important thing is that if you want to talk of economics, at least talk of clear data and the actual situation. When who has who is the leading the financial inclusion initiative, the Prime Minister, through Jan Dhan account? It is the public sector bank who have been instrumental in opening almost 50 crore bank accounts under the Jan Dhan account, and that is the main source of financial inclusion process that the government has taken up. The World Bank, every international institution has applauded the Indian government's effort in financial inclusion through Jan Dhan account. only so such a small number of our population was getting banking facilities. Now almost more than 70% of the loans are given to the women under the stand up and other mudra loan yojana. The Jan account of 50 crore accounts is being used by the government to through direct benefit transfer, targeted delivery of social welfare schemes. The employees, almost more than 3.26 lakh crore employees have been, their positions have been fulfilled. And who is benefiting? It is the public also is one of the biggest investor beneficiaries from the banking valuation. Ultimately, if the bank are strengthened, bank valuation is good, the whole economy, whole the cycle of the economy of credit creation, credit formations, mudra loan, direct benefit transfer, kisan credit, every government welfare schemes is being undertaken through public sector banks. They are given targets under district level development banks. Every district has been identified with one bank, nationalized bank, to promote credit formation, to promote mudra loan, to give collateral free loans, small loans, Shishu, Tarun, and other loans. Even MSME is getting good collateral free loans through government scheme of credit guarantee schemes. So all these schemes are benefiting for the common public, common people, small businesses, women entrepreneurs,
Right.
startup ecosystem, the credit formation, recycling. If
Absolutely.
you see the economy moving fast and growing at a fast pace, it is because our banking sector has strengthened. It has provided strongly about the bad debts and started a recovery process. Now, people, businessmen, etc., are more vigilant
Yes.
that they need to repay the loan. Earlier, under the UPA, they were of the opinion that once you take a loan from the bank, you don't need
Absolutely.
to repay it.
Absolutely. So, as you're pointing out, so we at this point in time, you are saying that the government has actually put out comprehensive reforms, and not just that, it is reaching the common man. Thank you very much for joining us, Mr. Agarwal. Also joining us right now is Dr. Ashwini Mahajan. He's an economist. Good evening, Dr. Mahajan. Thank you very much for being with us on The Big Story. My first question to you is, what do you make of the timing of these statements that have come in from Mr. Rahul Gandhi? Do you agree also with the FM, who has, in a sense, said that this is a targeted attack without any basis because data seems to point otherwise?
See, banks are not the charity organizations. They are commercial banks by definition. So when banks are functioning, we have to see that due diligence is made while granting loans, and at the same time, being an economy where we have to think of the welfare of the masses and also the uh, the help we can provide to the SSIs and small businesses. So for that, we have a system of priority lending at a lower price, lower rate of interest to these ventures. Now, so far as the allegation is concerned, this is in a way, I think, it's a compliment to the banking system and the government that they are taking due care that banks earn sufficient profits. Because if the banks do not earn profit, if the banks are not economically viable, then the whole economy, the uh, business uh, cycle will get affected. And therefore, what I believe is that banks have to earn profit. Banks not for giving a dividend as public sector banks giving dividend to the government. Also, bringing about a faith in the banking system of the people so that they deposit their money, because banks function on the very trust of the people on the banking system. We see that in the last few years we have been able to revive the banking system, and now I can say the banking system has been fully revived. There was a time when people were scared of depositing money, even with the public sector banks. So now, when after the recapitalization of the banks are moving to a right direction. Banks are earning profits. Banks' share prices are rising. People are people's faith has again regenerated in the banking system. So
Right.
I think it's a compliment to the government and the banks as given by Rahul Gandhi ji.
Right, sir. So, and you did touch upon this, that public sector banks still remain extremely crucial to the government's social welfare schemes, right? Like, I mean, for instance, you spoke about priority sector lending. Given the targets that public sector banks do manage to achieve, private sector banks do still fall a tad behind on a lot of those fronts. Of course, a lot of the data that we spoke about earlier in the conversation in terms of the GNPAs and how we've seen those reduce, how we've seen capital adequacy increase, I think those seem to be fairly documented. But, in more recent times, tell us about the importance of public sector banks, to still further some of the social welfare schemes by the government.
See, we have been running the world's largest social sector schemes in the country. No country in the world have opened so many Jan accounts or zero balance accounts anywhere in the world, even in terms of the proportion to the population. So this is a very big achievement of the banking system. And if we see, it is not just opening of Jan Dhan bank accounts, it is about bringing about efficiency in the system. We know that in the past, our logistic costs were very high. Now, when we have Jandhan accounts, everybody has most of the people have linked their bank accounts with the mobile uh, and UPI. And through that, the efficiency in payments have improved like anything. And that is helping the banking sector also to really earn more profits. Now, if we see, uh, a major role has been played by the public sector banks. So, role of public sector banks is very well recognized, and that is the reason why, despite all pressures, the government is not not selling the public sector banks as the talks were going on earlier. Now, therefore, it is the duty of the banks, though there are certain issues which we have to look into, like Basel plus norms, and in terms of the capital adequacy and others. So, but whatever may be the case, we understand that the Indian banking system is doing good. Now, might be Rahul Gandhi's complaint be about the charges being made by the banks, or if they are making a due diligence. But we also understand that through Mudra scheme, the banking system has been able to provide a big chunk of loans to the small businesses, and therefore we must ensure that to run these public sector run these social welfare schemes, whether it is opening Jan accounts or providing DBT or making online transactions, the banks have to play a very crucial role. And we understand that even if we have a large private sector banks, we understand that the importance of public sector banks can never be reduced, because it is the it is the faith of the people, trust of the people in the banking system, which comes from the public sector banks, because public sector banks deposits have the guarantee from the government of India. So this guarantee is never written, but when banks are owned by the government, banks are owned by the President of India, uh, uh, in legal terms. So people's money is safe, and we see after 1969, there has never been a bank failure. Obviously, public sector banks have now not failed. Even the private sector banks, those who are failing, they have been bailed out. We know the Yes Bank story. We know even Lakshmi Vilas Bank. So we have to see that banks, whether private sector banks or the public sector banks, they must be strengthened. Diligence has to be made in granting loans, and therefore profitability and the commercial angle has to be looked into, because they are not the social sector banks, they are actually the commercial banks.
Right.
Right, thanks a lot for that, Mr. Mahajan. That was indeed extremely informative. Thank you so much for taking time out to speak to us today. Nupur, it's been an extremely sort of interesting decade for public sector banks and financial institutions at large in India. I think at this point, the data sort of speaks for itself. We're looking at record low GNPAs, adequate capital, and also, going forward, financial institutions, public sector or private sector banks continue to remain very critical given India's credit needs.
Absolutely.
And to be able to support Indian economy, the kind of growth we're targeting. Yeah, that's what's your takeaway?
The data, in a sense, Pallavi says it also. Well, with that, it is a wrap on the big story that on NDTV Profit. Thank you very much for joining in, but do stay with us as we bring you more on NDTV Profit.